Ever feel like earnings calls are in some kind of secret code?
Uh-huh. Yeah, sometimes it feels that way.
Well, today we're going to try to crack that code. We're diving into Texas Instruments' latest report.
This should be a good one. Texas Instruments, they're everywhere, you know?
Totally. Smartphones, cars,
Well,
factories.
exactly. They're like a sneak peek into how the whole global economy's doing.
Right. So big picture, anything stand out to you from this call?
Well, first off, it's a mixed bag.
Hmm.
Kind of reflects where things are right now, economically speaking.
Yeah, I saw that. Revenue's down compared to last year, but up from the last quarter. What's with that?
Yeah, it's that uncertainty. Things are all over the place. Even Texas Instruments called it out. Asynchronous market behaviors.
Asynchronous. So, like, things aren't moving together the way they normally would.
Exactly. Some markets are recovering faster than others.
Okay, so let's break it down. What's looking good?
Good question. Personal electronics are showing some life. You know, phones, computers, that sort of thing.
So people are buying gadgets again.
Seems like it. And enterprise systems, those big computer systems companies use, they're doing okay too.
Okay, and what about communication equipment? 5G, all that?
Yep, that sector's picking up steam as well. But, and this is important, none of these are back to where they were before.
Right, so it's more like a sigh of relief than a celebration.
Yeah, pretty much. And then there's the big wild card.
Let me guess. China.
Bingo. China's the elephant in the room, or maybe the dragon in the room, I guess.
Uh-huh, yeah. What's happening over there?
Their automotive market is exploding. Like, seriously booming. Up 20% for 2 quarters straight.
Ooh, 20%. Everyone in China suddenly decided they need a new car.
Well, it's more nuanced than that. Electric vehicles are huge there right now.
Ah, right, EVs. More chips in those.
Exactly. And their business cycles are different, tend to swing up and down more dramatically. Plus, and this is fascinating,
Okay, I'm hooked. What else?
some of this growth, it might be Chinese companies taking market share on a global scale.
Wow, so it's not just China's own demand, it's them becoming bigger players on the world stage.
That's what it looks like. And Texas Instruments, they're seeing it firsthand. They had record automotive revenue in China.
Wow, that's a big deal. But it's not all rosy in China, is it? I remember something about industrial demand.
You're right. That's still lagging behind 8 quarters in a row, actually.
3 quarters. Ouch. So companies are still hesitant to invest in big projects.
Yeah, and that's a global trend. It makes what Texas Instruments is doing with their inventory even more interesting.
Okay, you've piqued my curiosity. Inventory, what's going on there?
They're stockpiling big time, even taking on some of the burden from their customers.
Wait, hold up. Why would they do that when everything's so uncertain? Isn't that risky?
It's definitely a calculated risk, but it tells us a lot about how they see the future playing out.
So they're sitting on a mountain of chips, hoping demand picks up. That's a gutsy move.
Yeah, and the analysts on the call, they definitely noticed. They were peppering Texas Instruments with questions about, what are their customers sitting on?
Right. Is there too much inventory out there, like a tech bubble ready to burst?
Exactly. But Texas Instruments, they were playing it close to the chest.
Did they give any hints about what their customers are holding?
Not really. They said they don't have perfect visibility, which, let's be real, no one really does in this global supply chain craziness.
Sure.
But they did say that what they are seeing from their customers seems pretty normal.
Normal these days being a very relative term.
Right, totally. But it seems like, at least from what they're seeing, customers aren't hoarding chips.
So it's a calculated gamble on Texas Instruments' part.
Absolutely. But it does bring up an interesting point about their business. It's not just chips, right? You have analog, you have embedded processing.
Right, right. Two sides of the same coin. Remind me again, what's the difference?
So analog, think of that like the essential stuff. Managing power, sensors, all the behind-the-scenes workhorses of electronics.
Okay, so like the nuts and bolts, and embedded processing is more like...
The brains.
Right, the microcontrollers, the processors, making decisions.
Exactly. And guess what? They're not performing the same way in this crazy market.
Oh, really? Which one's hurting more?
Analog. It's hurting. Analog, it's more tied to the general economy. When times are tough, people buy less stuff, need fewer analog chips.
Makes sense. Less demand for everything means less demand for the building blocks.
Yep. But here's the kicker. Their embedded processing, it's doing okay.
Wait, really? But isn't that tied to industrial stuff? And that whole sector struggling?
That's the thing. It is tied to industrial and automotive, which, as we know, aren't exactly setting the world on fire right now.
So they're kind of stuck, right? One part's down because the economy's slow, the other's okay, but it's tied to markets that are slow to recover. What's their plan?
That's the million-dollar question. For 2025, they're saying they're optimistic. Long-term growth, they keep saying, especially in industrial and automotive.
Easy to see you're optimistic long term, but what makes them think that?
Well, for industrial, they're putting a lot of faith in, that whole Industry 4.0 thing.
Smarter factories, more connected systems, all that.
Yeah, all of that. More chips, more sensors, the whole shebang. They're betting that even with the short-term hiccups, that trend is going to be a big winner for them.
So they're banking on the future of manufacturing being very tech heavy. But what about cars? I mean, yeah, EVs are hot, but is that enough to carry them if the rest of the car market slumps?
Good question. And they admit a lot depends on stuff outside their control. Interest rates, for
What
one.
if those stay high?
Exactly. Could slow everything down. And then there's inflation, global trade. It's a mess out there.
Like trying to predict the weather, way too many variables.
Totally. But even with all that, they are making moves. Big moves. Like, remember those massive factories they're building in Texas?
Yeah, it's like their own little Silicon Empire. But those things aren't cheap. Aren't they worried about overspending if things don't pick up soon?
Oh, there's definitely risk there, for sure. But it seems like they see it as, an investment. More control over their own supply chain, ready to go when demand bounces back.
So they're putting their money where their mouth is, betting on themselves to be ready. Bold move.
And it's not just factories. They're also pouring money into R&D, new chip designs, you name it.
So playing the long game, even with all the short-term chaos.
Exactly. Sustainable growth, that's their motto. And that also applies to how they manage their money. Capital allocation, they call it.
Sounds important. What's that in plain English?
Think of it like, you get your paycheck. What do you do with it?
Bills, rent, maybe a little fun money, hopefully some savings.
Right. So for Texas Instruments, their priority is putting that money back into growing the company. Hence the factories, the R&D, all that.
So growth over everything.
Pretty much. They're convinced that's how they create value for their shareholders in the long run. But they also know those shareholders like a little something something every now and then.
That's where the dividends come in, right?
You got it. Sharing the profits. And guess what? They just announced another dividend increase this last quarter.
Putting their money where their mouth is.
Yeah.
Literally. Investing in growth, A&D. Rewarding shareholders. Sounds like a solid plan.
It's one of the reasons they're considered, a blue chip stock. Solid, stable, potential for growth over the long haul.
Like the wise old owl of the stock market. But even the wisest owl has to adapt. Are they keeping up with the times?
Oh, absolutely. They're always evaluating, what's new, what's changing. Got to stay ahead of the curve.
Speaking of staying ahead of the curve, what about the competition? Did they say anything about new rivals, new threats?
It's less about, specific companies gunning for them and more like the whole industry is changing.
Okay, so who are these new players shaking things up?
It's a real mix, actually. You've got these scrappy startups, especially in those really specialized areas like AI chips or power electronics.
So they're finding those niches where the big guys haven't quite cornered the market yet.
Exactly. But it's not just the little guys either. Some big, big players from other industries, they're getting in on the action too.
Oh, interesting. So we're talking like Apple, Google making their own chips.
Ding, ding, ding. That's exactly what's happening. That whole vertical integration thing, it's gaining steam big time.
Vertical integration. Refresh my memory. What does that mean again?
So basically, it means a company's controlling more parts of their own supply chain. Like instead of Apple buying chips from, say, Texas Instruments, they design and make their own.
Ah, right. Makes sense. They get more control, probably save some money, and they can really tailor those chips to their exact products.
Exactly. But like anything, it's not all sunshine and roses. It creates challenges for companies like Texas Instruments, but also opportunities.
Okay, let's play devil's advocate here. What's the downside?
Well, the obvious one is competition. If a huge customer like Apple is suddenly making their own chips, that's less business for Texas Instruments, right?
Right. Makes sense. But you said opportunities too. What's the silver lining?
So this whole trend, it's creating entirely new markets for specialized chips. Even if the Apples of the world are making their own processors, they still need other stuff. Power management chips, sensors, all sorts of things. And that's where Texas Instruments can really shine.
So, yeah, they might lose out in one area, but gain in another. Classic case of one door closes, another one opens.
Perfect way to put it. It'll be fascinating to see how this all shakes out. But what we do know is Texas Instruments, they're not blind to it. They're adapting their strategy as they go.
Yeah, they're not just sitting on the sidelines waiting to see what happens.
Definitely not. They're out there making moves, shaping their own future, even with all the uncertainty in the world right now.
And that takes us right back to the bigger picture. Do you think they can hit those pre-pandemic highs again?
Honestly, if I could predict the future that accurately, I'd be, I don't know, on a beach somewhere not talking earnings calls. There are just too many factors at play right now.
Haha, fair enough.
Yeah.
But based on what we've talked about today,
Hmm.
what are the big things our listeners should keep an eye on?
Interest rates are huge. If those stay high, it could really put the brakes on the economy, and that would definitely impact demand for chips. Global trade, that's another wild card. And then you never know what consumers are going to do, right?
Hmm?
Will they keep buying new gadgets at the same pace?
It's a lot to think about. But hey, that's what we do here, right? We dive deep, connect the dots, and try to make sense of it all.
Absolutely. We're all just figuring it out as we go.
Well said. So, for everyone listening, here's the takeaway. This Texas Instruments report, it wasn't just about numbers. It was a peek behind the curtain of the tech world, the global economy, the whole shebang.
Totally.
Keep asking questions, keep learning, and join us next time for another deep dive.